All right, what is going on, everyone? Welcome back to the channel. And in today's video, we are once again going to be focusing on ICT and volume profile and how I can actually marry these two concepts to formulate my entries and exits and how we get our directional bias. I really think that using both of these concepts together is incredibly slept on. You never see people trading volume profile with ICT. It's always one or the other. And really, I think it's a disservice. I personally think this is why I have my edge, is because I put both of these concepts together in a coherent manner to get my trade entries. So we're going to be talking about Friday's price action, and I'm going to get into it and dissect the trade, show the screenshots of the executions. But before I do that, I do just want to say sorry that this video did not come out exactly 1 week from the previous one. I know that that is what we are going for while we continue to build this channel. But I'm also working on building out a full course now for ASFX TV. A lot of people have been asking for that. If you don't know what ASFX TV is, it is the streaming service that I stream 3 days a week for, where I take my trades live. Now, if you don't have ASFX TV, you don't necessarily need it to understand my concepts. I'm going to be putting out these videos ideally every single week. But like I said, I'm incredibly busy also building out this course. So they might be a few days late every now and then like this one. But I don't want to get into that. Right now it's time to focus on the price action. And we're going to be discussing Friday's trades that I took on the ES. Now, first off, if we just zoom out on the 5 minute here, this is Friday. So this is the Asia session, start of the overnight. It was just a really choppy day, super consolidation, tight range, but there were some pretty clean moves here in the New York session. Number one, what's the first thing we do, guys? We mark our levels on the volume profile. So we'll go to indicators, SVP, session volume profile. Now, this is the current day's profile, but we don't use the current day's profile. We use the previous day's profile, at least in the way that I trade, all right? Some people do have strategies around using the current day's profile. The reason I don't personally like to use that is that these levels will change throughout the day because this profile is not done developing until 5 p.m. Eastern. So if the market continues to move, this point of control will actually shift with current price. Some people have strategies around that. Personally, what I like about the previous day's levels is they are static levels that I can trust. So we mark these off. This red line, of course, is our previous day's point of control. So we plot that on our chart. Right here, we have the previous day's value area high, another relevant level. Zoom in a little bit. This is our value area low right here. So we'll mark that. And then, of course, we're going to use previous day's low. And you guessed it, previous day's high. Those are our 4 key intraday levels. Now, I also use higher time frame levels, and we'll get into that. But these are your key intraday levels. So what I do when I plot these on my chart, I make a folder for them each day. And I just title it previous day's volume. Put all of those into the folder so I could see them when I want to see them. And if I don't want my chart too cluttered, I could just get rid of it. Now, I don't need to have this indicator up for the rest of the day. Again, other people, they keep that indicator up. They're looking at the volume profile a bit differently than me. That's all I need. I need to know where my previous day's point of control is. I need to know where the value area high and the value area low are. Once I have that, I just need them on my chart so that I can dictate the context in which the market is moving in relation to those levels. And that's it. So I don't need to have my chart too cluttered, right? Now, what's interesting about the trade that I took on the ES, let me actually pull up that screenshot so you guys can see the executions. Because first off, if you're looking at this market, if we're just zoomed out and you remember last week's video, you would probably think I was taking shorts, right? Because why? We are below the previous day's point of control all day. Again, market opens here. Asia, London, we just cannot get above this previous day's point of control. We can't do it. What's the golden rule? If we are below previous day's point of control, we look for shorts. If we are above previous day's point of control, we look for longs. But I'm honest with you guys. I don't always follow my own golden rule. Now, on Friday, it worked out. I caught a long actually during this price leg right here. But if I'm being honest with myself, I probably would have had an easier time trading if I just followed my own golden rule and then caught the short down here. This was a pretty massive sell-off, and it actually was very coherent. When in hindsight, of course, it was a really coherent move because we went down to sweep these lows right here. So that was the draw on liquidity for the first half of the day. And then once we did that, we ended up sweeping it and moving higher. And we took my initial target, what I wanted to see, which was London session highs to get taken. I'll get into that in a moment. But yeah, in hindsight, this was very coherent. That's the problem with trading sometimes. It's not obvious until it happens. But why I think it would be cool to go over this trade is because even though it wasn't perfect, I still was able to use the previous day's point of control to help me take profit. Because let me get the execution up. Now it makes sense to pull this up and show you guys. So here it is. I took longs on the ES on my Tradeify accounts. Again, I'll dissect all this price action in a minute, but we had 1 minute bullish SMT divergence between ES and NQ. Coming into a key level, we had already swept a 1 hour swing low. We had a bunch of stacked highs that I like to use as a draw on liquidity. We had London session highs. Again, I'll show you that in a moment. So I was bullish for that reason. We were below midnight, so we were in a discount of the daily trading range. And then we got this 1 minute inversion. So you could see my trigger point was right on that 1 minute candle closure above the bearish fair value gap. That's our inversion fair value gap entry. And my stop loss was not just below recent structure. This is just the way I like to trade. So if I'm going to be on the right side, and this inversion is the one that is going to bring price up to my target, then we should not get a closure back below the inverted fair value gap. Now, sometimes we do, and then the market still goes into my direction. That's just the nature of trading. But more times than not, if you do have the right inversion, your stop can go below the inverted fair value gap if you're someone that wants to use those tighter stops. Now, I don't claim to, I don't claim to have an 80% win rate and then capture 3 or 4 trades. The reality is I have a much lower win rate than that, but my losses are tiny in comparison to my wins. So that's just how you like to trade. You can use these concepts and be someone that goes for 2R or 1R or 1.5R. Your stop would just go below the recent structure here. Or if you're someone that likes an even wider stop, your structure point can go right here. I mean, your stop can go here, which is also a very safe stop loss placement. That's just up to you. I'm not here to tell you exactly what you should be, how much R multiples you should be going for per trade. This is just the way I like to do it. The important thing is the concepts and why the market went to where it went. But anyway, there was my trade. Now, we could pull it up on here and kind of dissect it a little bit further. But again, just staying on the 5 minute here. I am going against my golden rule, which is just stay short if you're below the previous day's point of control. But it was coherent to me. I was seeing this as our liquidity sweep. So we had this nice bullish reaction here. We could not get below previous day's low. We swing failure patterned it. A swing failure pattern is when you get the market to go below, dip below a level, run all of those stop losses, but then close back above. Why is that relevant? Because there are trapped traders inside this wick. So once there are trapped traders, that can signal a reversal, which it did intraday. We got an intraday reversal, and I was able to take my profits right at the previous day's point of control. Now, let me get my risk reward tool up. Now, again, I wanted to see higher prices. We had all of these stacked highs right here. It was a very, very obvious draw on liquidity to me. We have 1, 2, 3, 4, 5, 6, 7. All of these stacked highs were low resistance liquidity. It made perfect sense for the market to draw up there. But I don't need to hold to my full target if I can get good risk reward and then take profit way earlier. All that does is increase the probability of my trade working out, even if it doesn't go to the full target, which is why I wanted to highlight this particular trade because, I didn't have the perfect read. I did not have the perfect read, but the volume profile, previous day's point of control specifically, kept me from getting out at the right spot instead of holding and then, ending up taking a stop loss or a break even when we get that pullback. Because those are the type of things, I don't know about you guys, those are the type of things that put me on tilt when I'm running into a lot of profit. I'm up 2, 3, 4R, and then I give it all back. I used to do that a lot. And the way I circumvent that now is by taking profit a little bit earlier. I like to front run my targets because sometimes you're not going to be exactly right. You might have the right idea for that particular price leg, but you might not be exactly right. So it's important to be able to make sure. Maybe you're someone that wants to take partials up here and then lock your stop. That's perfectly acceptable too. I'm more of like a one in, one out guy. But anyway, that is why I wanted to take my profits early. And real quick, I mean, we actually were correct on the draw and liquidity. So you see right by the end of the day, the market does come up and take out all of this low resistance liquidity. So we had the right idea, but just not the perfect timing. Again, the market wanted to come down and sweep this liquidity first right here, and then tap into that 1 hour fair value gap right here. So again, in hindsight, super coherent price action. Just they made it a little difficult for me. But going down to the 1 minute to go over this entry, we have our green line right here, which again is also previous day's low. We have our swing failure pattern on the 5 minute. We have not a perfect market structure shift, right? Because from a 1 minute perspective, a market structure shift would actually have to be up here because this is the last lower high that made a lower low. But listen, this is why sometimes you can't listen to your exact rules. When we have such an overextended move, to me, I just wanted to see these highs get taken. So I had to focus more on the lower time frame structure. And what I said was, okay, we swept a higher time frame level. We swept previous day's low. If we can get a pullback, because I have a clear target, right? I wanted to see these get ran through. If I can simply get a good entry, a coherent entry, and we can get some bullish SMT divergence, my thoughts were that will be enough to get us a higher probability long, at least back up to the previous day's point of control, which is what we got. So if we go to the ES, or if we go to the NQ in a moment, it was this 8:13 or 8:15 a.m. candle right here, this swing low. You see ES does not take out that low, right? It puts in a higher low right there. But if we go to the NQ real quick, and let's zoom out. Let's go to that same candle. What do we have here? 8:13 a.m. What does NQ do? Makes a lower low. That's our bullish SMT divergence right there. So we got our bullish SMT divergence. Number one, check. Number two, we swept a 1 hour swing low. So we did sweep higher time frame liquidity. Check. Number two, draw on liquidity. What are we targeting? London session highs, all of these stacked highs up here. 1, 2, 3, 4, 5. Again, doesn't matter that we didn't take it right away. Can I get good risk reward on this idea? I don't need to see the market go exactly where I think it's going to go. I can still profit from the idea. Check. So those are our 3 checks. We have everything we need for a high probability setup except an entry. All we need is an entry now. And what did I use? Again, I talked about this just before. 1 minute inversion fair value gap. So that's right here. My entry was on this 1 minute candle. So I had to deal with a little bit of consolidation. But again, what am I doing? I'm just gauging the reaction inside this inversion. In a high probability setup, we should not get a 1 minute closure back below the fair value gap that has been inversed. That is the rule of thumb. Again, can it happen sometimes and then your trade still works out? Yeah, nothing is perfect. Nothing is foolproof. But more times than not, if you're going to be on, if you have the right inversion and you have a good target, you should not get back below your inverted fair value gap. That's why people really like these entry systems, because it can allow you to have a really tight stop loss if that's the type of trader you want to be. Now, again, like I said before, your stop could be here. You could still get a clean 2R. Your stop could even be here. I think you could still get, yeah, you could still get 1R right here, or even a little bit more if you wanted to go right for the previous day's point of control. So you could get good risk reward no matter what type of R multiple you like. Again, I'm just the type of guy, I like those tighter stops, and I like, I'm fine taking a paper cut or two, and then my winning trade is going to make up for all of that times 3. It's just the way that I like to do it. But that is the long that I took. Again, I'll pull that screenshot up one more time of the executions. Right there. So there's my entry on the closure of that 1 minute fair value gap. Little bit of consolidation and then move up. Again, I front ran my target just a little bit just to be safe. Again, I got over 3R on this trade, and it actually was my first trade of the morning. So it kind of worked out perfectly. Usually I'm a guy who takes a paper cut or two before my full idea plays out. So when I get a move like that and I can capture 3R on the first try, I'm wrapping it up. I mean, I was done for the rest of the day. But anyway, guys, that is the crux of what I wanted to go over. So again, if we just want to, let's just go over everything that was relevant about this price action and what I wanted to really highlight. Number one, fading the previous day's point of control is never going to be the easiest way to play it. Again, I said I would go over this. What could have been an easier way to trade on Friday? Just accept that we're trading under the previous day's point of control, that it's been a major level of resistance, and wait for a retest in the New York session and then just catch a short. I could have caught way more, a way bigger profit getting short somewhere in here and targeting, again, either the low a day, this wick right here, or if we zoomed out, use the higher time frame, you could even be looking for a target like this once you can recognize that that is the draw on liquidity, which again, in hindsight, it's obvious, but it is coherent. It's a really coherent setup. You have this very clear imbalance right here. I mean, made sense to look for that. So, I'm not always going to trade perfectly. That day, it worked out pretty nicely. But I could have had a much easier time just waiting for that retest, shorting somewhere in here, targeting either the swing low or that 1 hour fair value gap. We could have caught a lot more. But I think it is important to highlight that we were correct. So when you have all these stacked highs right here, once we tap into the level that the market needed to rebalance, then we have the juice. And in the PM session right here, I mean, we just blew through, took out all of this low resistance liquidity, and it didn't happen until we tapped the relevant level and swept relevant liquidity, right? Again, being that swing low right here. So I think that's about it for this one. I don't want to keep it too long. Thank you guys so much for listening. And of course, again, if you can give me a subscribe, a like, a comment on this video, it's always much appreciated while I continue to build the channel. Again, sorry this video is a few days late, but we're working on this full course again with ASFX TV. I'm really, really excited about it. And again, guys, I'm not saying that I'm not going to have all of this type of information here on YouTube for free. I am. I want to keep growing this channel, but the course is really designed to give a more organized format. So we could go from day one, like what is volume profile? What is a fair value gap? What is liquidity? How do we use the Asian session range? We're going to go from start to finish so that it's a much more organized format where I can really build out my ideas. Again, if you're not into that, just stick to the YouTube, turn on subscriptions, turn on the notification bell, and you'll always know when I have a new video. I'll also be going live during the Asian session stream a couple days a week. I've been having some really good trades in Asia, so I want to keep up with that. I might even be going live tonight for Sunday Night Open. So again, turn on those notifications if you want to check that out. But thank you again so much, guys. And yeah, next video will be out next week. I promise it won't be a couple days late this time. But all right, guys. Take care and happy trading. Peace.